Welcome to this week's Cattle Call. I'm Susan Littlefield. We know it's an interesting way to wrap up this marketing week when we look at a variety of fingers that are in the pot. Of course, we're talking politics and all the global meetings that have been taking place, talk of inflation, everything that's been going on. How is that weighing into what we see in the trade? A macro type of day on a Thursday. Hot weather, is that going to affect, and how will it affect what we've seen within this cattle industry? It's better numbers for the cash, but the box is moving to the lower. We get all the details today as we talk with Brad Kooima. He's with Kooima and Barlick out of Sioux Center, Iowa. So let's talk about this macro day that we saw on a Thursday.
All right, Susan, thanks for having me on. Of course, unfortunately, we're talking on a day where it's a big, ugly red day. I think one has to understand that. So you've got a broader situation with what you set up in your little prelude here, that between talks with what's going on with Summit, G2 Summit, with this talk out of the Federal Reserve, where it appears like they're recognizing that there's a risk of inflation. You know, people have seen me on your program know enough to know that I'm a bit sarcastic. It's like, no kidding, really. I think there might be inflation. I think it's already happened. But anyway, this language now that, well, we might have to do quantitative easing, which is a fancy way of saying that we're going to, tighten up money supply to make sure we don't, the interest rates probably are going to have to go up a little bit, yada, yada. Well, the market reacted to that with a pretty disturbed note starting yesterday already, where you saw the American dollar have a big up day yesterday and another bigger up day today. As they see this Fed policy of one that's going to kind of, be conservative enough to probably protect sort of our economy, but any inflation sensitive commodity, so basically what they're trying to do is they're trying to send the message that the inflation run is over and now we're going to go into a period of potentially deflation. Well, talk is cheap, takes money to buy whiskey, but so you see that the inflation sensitive commodities such as metals, especially grains, and now it's filtered into all of our markets almost. I think you need to remember, Susan, that these big funds, these big hedge funds, these funds that they have holdings in several different markets, and if they think there's going to be inflation, they're long gold and they're long corn and they're long, et cetera, et cetera, et cetera. So when you get into this puke where they're liquidating not just their long gold and their long silver, but it affects corn, and you can see it's even affecting cattle, and hogs are no better either. And some of that is some, posturing and language out of China too. Hog market in China has basically collapsed over the last 6 weeks. So, so you got a macro deal where the cattle tried a little bit early today to kind of hold together, but they buckled underneath the pressure of the outside stuff.
It's nice to see a week with some better cash, though, out there for our producers.
Oh, without a doubt. And now we've taken the cash, I believe, officially, at least in the north. If you've got old crop cattle, which there aren't very many of them around, and you got a choice select spread at $33, $4, $5, those old crop cattle are going to bring a premium, and they have been. There's been a few cattle traded as high as 125 on an old crop kind of an animal that's going to be, probably almost 100% choice. The new crop calves probably a little harder to come by. Some of the regional packers running at about 197, some of the majors at 195 or a little more maybe, but definitely a higher cash market. The South hasn't traded very many cattle. Looks like they're going to be 22-ish, maybe 3. Of course, their cattle don't grade anywhere like the cattle do in the North.
What about box beef? I mean, lower box beef isn't all bad.
It isn't, because we need to probably get these middle meats back into a price that's a little more competitive. We can thank our friends on the food chain here for, as a producer, we got no benefit out of this inflation rally, none. And the consumer got the privilege of getting to pay a whole lot more for the product than I think that they should have, to the point where there is pushback, and especially this time of year. This isn't a big time where you sell a lot of middles. What I mean by that is that the steak cut, the ribeye, the tenderloins, the strips, etc. This is more of a BLT hamburger hot dog thing that you move into as you go to the 4th of July and the season behind that. So I think it's probably, frankly, it's all right to pull these middles back down to a price where they can be a little more competitively priced. I mean, $20 ribeyes I think that's maybe where this whole legislative will or this ire has reached another level, now where where before you thought, well, maybe the producer was the one that was really being disadvantaged, and now you also have a consumer that I think is paying way more than he or she has to for what the producer's getting paid. So anyway, yes, the boxes are going to come down. Who cares? They went up $150 and we didn't get paid anymore. They can go down $100 and we should still get paid more for what we're getting for our live cattle, in my view. So, and they're not going to go down that much. The residual global and domestic demand is just too good, but we'll get some pullback. We always do this time of year.
Where are the numbers in the South? Why are we not seeing them, as you said earlier, show up?
They've got some numbers in the South. I think the real surprise is, where are they in the North? Now, Texas show has finally come down a little bit this week. Kansas has some numbers, not overwhelming. This would be the time of year where typically they go out of supply and we go into supply as we get into our new crop calves in the North. And what I'm surprised at is the lack of supply here. And they're, I think we'll have some more cattle as these calves come, but I think it's going to be later rather than sooner. I think the calves came late and they were light. So, I sarcastically, not really, I think I told you off air, it could be that the same guy that's keeping track of placements here was the guy in charge of the corn crop in 2019. Yeah. Kidding. Just kidding. We love the USDA.
Yeah, there you go. Finally, as we wrap up, it has been hot. Heat indexes, 110 plus in some of these cattle feeding areas. Detrimental right now, but it's going to have a trickle effect for the next couple of weeks, isn't it?
Well, cattle go off feed, and so you hold some weight off. I couldn't believe it, so the good weights, the weights that are, inclusive of all the weights, come out on Thursdays, and they just came out, and the steer and heifer carcasses are 864. A week ago, 860. So went up 4 pounds. Can't even imagine it with the weather. And a year ago, in the middle of the COVID freaking wreck, it was 870. We're only 6 pounds under a year ago. I don't know where this weight comes from. Part of the problem, of course, is you've had a little less kill here for the last 8 weeks or so, because of absenteeism, cooler cleanouts, had to fix the Cargill ammonia leak, cyber attacks, you name it. So we've had some problem with having that kill as big as we'd like, and maybe that's the explanation for some of this weight holding back a little bit. But I got to say, though, the bottom line to the thing is I'm encouraged that we moved off of the 120, that sympathy bid or whatever, people characterized it at, and traded Cal at 23 and 4 and 5. I hope that that's a sign of things to come. I think even with the 200 lower futures today, I'm optimistic that cash will be steady higher again next week. Let's hope so.
All right. Fingers crossed. Thanks so much, Brad. Brad Kooima has been joining us for this week's Cattle Call. Just a reminder, commodity futures and options involve substantial risk of loss, are not suitable for all investors. And that is the Cattle Call. I'm Susan Littlefield right here on the Rural Radio Network.